Yesterday we gapped lower. We never tested the pre-market low. After initially failing above 272 here, we touched 271, held a little bit higher, and then in the afternoon when the Fed minutes were released, we broke to the upside, filling the gap, moving inside the prior day's range. I should point out on the open that the top of the move was at the prior day's low. So people who've faded there, always on the first try when a gap down, always a good bet to short here. You don't know if you're going to walk into something as big as we had, but usually at least you'll get a 30, 40 cent pullback. The breakthrough was pretty strong in the afternoon. It stopped initially in the highest 72s. You can see this wick right here. And then came off about 40 cents before closing at the high of the day. So we continue to consolidate here in the low 270s. The burden is on the sellers to prove that they can cause a deeper pullback. Here's our range. What we want to see is just to move outside of this range from the last week and a half. Either a strong break and close. Tomorrow's Friday, so if we get a close up here tomorrow, coming in long to the Memorial Day week is probably the good bet. And vice versa. If we get a close below 270 coming into the weekend. So let's see what happened at the WM yesterday. Okay, so the high from the 18th, support from the following morning, that became yesterday's high. And notice that unlike the SPY, it didn't take out its morning high in the afternoon. $162.20 to $162.30 is a spot to pay attention to. See if we fail there again. We supported at whatever this level is, 161.35, which was the high on the 16th. We supported on the following day, supported in the following day. That ended up being the support in the afternoon. It's a pretty tight range, actually. It's about $1 range. So we want to watch for any type of movement. It's called this. This is the band in here. We want to see which way it breaks out of this band right here. Tight band on the upside, a little bit wider band on the downside. 161.30 down to 161. All right, so a bunch of stuff in play. Best Buy, which is usually a good one in the group of large caps that report very late in the earnings season. Here's the daily. Yeah, this was up at 78 earlier. During the conference call, it's getting hit. And we know from the end of the year to early 2018, it ran from what broke out above 57. Actually, no, this is, we're like 58 and a half. Went from 58 and a half to 78. Looking at the numbers, it didn't look like there was enough to get it to go to the downside to come all the way back down to this major support on the daily, but it is, this is the 50% retracement of this move right here. As I was looking at it earlier before they started getting hit in the conference call, I thought the further it got below 72 would be a pretty good bounce candidate in this area right here. That remains to be seen when the market opens, but right now the sellers are in control. I nibbled in the mid 71s. It actually reminds me of Kohl's from the other day when it was up a lot when we started talking about it in the morning meeting, and it just This obviously this down move started earlier. It started at 7 o'clock this morning, but then it accelerated after 8 o'clock. It's down another $2.50 from 8 a.m. So the way I played Coles the other day when it had that huge move was just shorted the pop right on the open, came down, and then had a bounce, and then eventually trended down the rest of the day. Not really a bounce so far. And the first time it came down here to 71.20, it did bounce back up to 70 cents. And whoops, now it's bouncing back up. So ideally, we would see a move up to in the 73 to 74 area on the open. Look for a failure up here, and then a move back down below 73. You'd get confirmation that it's a good short, and then you'd want to see what happens at the kind of the pre-market low. Whether or not it gets that continuation like Coles did, or if it supports here and then is range bound. Any type of move, we have resistance on this. Yeah, 70, and I put actually 74 as inflection on the sheet. So as long as it gets up close to the 74 and is below it, we want to short into this. If it has a huge bounce and gets like this and then starts to support here, then we can kind of switch our bias to the long side. But right now, I'm not looking particularly good for that possibility. All right, NTAP. So NTAP, I moved up towards the number 2 slot on the sheet. It seems like it's overdone to the downside. It's been a rocky ride since it gapped up. So in November, I guess this is November's earnings. And you can see the trend, but it was in a wide channel. So from here to here was a very deep pullback. This must have been the February. This was probably the February low. But another deep pullback from 65 to below 60. This was a shallower one before making a new high. And then they sold it coming into earnings. So people are already positioned out of the stock coming into earnings, and then it's gapping down below 64. What do I have for support on here? 63.5, 64. So it's coming right into an area where I would think that it could bounce from. And below that, I didn't have anything till 61. Why did I not have anything till 61? I guess it was this, where it broke out of this little mini downtrend. Stay here. Actually then after it broke out of that mini downtrend, at 62 was bought 2 days in a row before continuing up. So I should actually have 62 on the sheet. So far it hasn't gone below that 63.5, 64 area where it is the first potential bounce. What you want to see is, let's say it holds here. First move is up on the open. You want to see it get above 64.5. If it gets above 64.5, then you look to play for the bounce up here with a little bit of a caution at the first whole number above it. But this is the area you're looking to play it to. All right. Next one is WSM, Williams-Sonoma. This initial reaction was really positive. The thing about this one was it had the large beat on the EPS, but they guided in line. Now, normally to me, that would be a huge red flag, and I think this is a really good fade. I think people have already done that. They've already faded it a couple of dollars. But the reason why it may end up being not that important, you may get the move back up to here, is look where it is in the context of the daily. It's not like it's anywhere near the high. So if it was closer to the high and they guided in line after a beat and it was gapping up, you would be fade central in this area here. But you can see after a multi-year uptrend from 10 to high 80s, it broke that back in 2000, a few years ago now, 2015. And since then, it's just spent like most of its time for the last few years inside of this range. And so this morning with the beat, it was gapping up above this major resistance from 2016, 2017. You got to go all the way back to 2015 when it was above $60. So at 54 and 53, they are buying it at 54.5 in the pre-market right now. But any type of flush right on the open, like yesterday, we'll talk about TIF in a second, it got down to that 16 from the pre-market, 116, and popped up $3, consolidated for 2 hours, then broke out. So you want to watch real closely, have alerts right in front of 54, and if it holds there and it gets back above 55, play it for a move up to the pre-market high, and then you kind of see what goes from there. If this was enough of a beat for it to get back up to the 2015 resistance. LB. So this one lowered their guidance by 15%, a bunch of negative things from positive and negative analysts, or positive and negative on the stock. So margin deterioration is never a good thing. Now it just, obviously it's already been killed. The last few months, well, first of all, here it gapped down on the last earnings to 44. So 44 to 32, well, it's about 30%. From here to here is about a 30% down move already. And if you do it from here where it gaps from, it's about 33, 34%. So that's the only thing it has going for it right now is it was already beaten down. And then I'm not sure what the catalyst was here. Maybe someone's downgraded or something. So you have them guiding down 15%. It really is the question of how much of a guide down was the market expecting. So far, it's held that above the recent low. So if it's priced in, this guide down, what you're going to see is you're going to see first move up. It's going to take out this 32.5, 33, and it's going to hold above this 33, and then you'll get something like that. And with all the analysts lowering it and the 15, that's definitely not expected. So you want to really, it could catch some people off guard. So you want to watch and see if it can plow through that resistance area. Now, if it just pops up and fails at 33 and very quickly you see it back down below 32.70, 32.60, then the mindset should be I'm playing it to the pre-market low. I'm playing it for the recent lows below $31. So it's kind of like a pop to here and a failure versus this type of thing where it goes into this area here. That would be different. Then you'd want to see it just hold on a pullback above 33 or a little bit below it and then start to work its way higher. And then you would play it just to kind of to here and see. TIF. So I made the one point about TIF, which was, we gotta zoom in. So there were two possibilities we talked about in the morning, right? It was pre-market support will hold, or they flush it through that. You try to get it at 115. And then the other thing I'll point out is if something flushes down on the open and it goes to the first potential support level like it did, and that was the low and everyone bought it there, and then bounces up, that bodes better for later in the day when it breaks out. Meaning, if it can't even like have a flush down to 15 or even a little bit lower to between 14 and 15, people really wanted that stock. Now they took their sweet time breaking it out. It didn't happen until almost the middle of the day. Well, I guess what is this? Right after 11 o'clock, it broke out. Lost the volume there. So I just wanted there's one other thing I wanted to just show you guys. So it consolidates for a couple hours or an hour or so. And then after 11 o'clock, when it has the first green bar and takes this out, you don't really have any volume confirmation. But in the next one, when it gets above 120, there's probably a lot of offers on 120. You want to see higher volume. That's going to, if it gets above 120 here and you're buying the breakout, you feel a little bit better, give it a little bit more room when you see the interest picking up. Maybe stops below 119.60 and 119. First target in that case is you look at the size of, kind of the move from the open to here, it's $3. So from 119, you look to 122. That would be kind of an area you would look to take some profits and see how it behaves. And then eventually it ended up going all the way to 120, 126, which was 1.5 ATRs, which is a huge, pretty much best case scenario. This morning it's down $1. This profit taking. First spot to look at would be 124.5, right here. It's kind of the last pullback before the final up leg. I put 124.50 on there, which I think that's right. Yeah, 124.50. And then below that, it's the spot, the initial target I just talked about here, 122 to 122.5. It's such a big move. You could see some profit taking today, but you want to look to see if buyers step in on either of those prices. Next one is CARA, this lower price one that just broke out early in the day on this licensing deal. It did have a second leg in the afternoon when it got above 1560. And so we want to make sure that if it does get a flush right on the open into this area here, look to buy it below 16. And the next major resistance is about $3 above this, so it's a really good risk reward here. Or you'll just have to play it if it takes out yesterday's high. The other spot to look at it is right here in the afternoon. They were bidding at 1620. The next one is Target, TGT. This one, right. So right on the open, it held 71.20. It popped up here almost to 73, came down. I think actually VTech put it in the chat that somebody was accumulating it here at 71.25. And it was, it became pretty obvious. I mean, the first time it popped up, it went up to 50 cents. This looks really good. And then you get this. This is a normal bounce type play. It didn't work, but this is quite often you'll get, the consolidation, it moves higher. You didn't get really a change in volume, but you get a move like this, and then you get this. Sometimes you can get this just trends up the rest of the day, a couple of dollars. In this case, it just came, the buyer never stepped up, and no one else wanted to step up, so they just bought the rest of the day. Into the close, I guess there's some sell orders. It's above where the buyer was yesterday. I would not want to be short the stock unless it showed weakness below this area here, like something got hit hard below 71 and started to hold below. It's a lot of accumulation. And then lose, LOW. So LOW filled their gap, or at least had a soft gap fill from last quarter. There was nothing really in the numbers that indicated it was going to do it. The price action showed that it was definitely a possibility. I think a couple of activist hedge funds getting involved helped it a little bit. But I still think, from my perspective, it's the prime candidate to fail a little bit higher than where it closed and kind of fail and come back down to $90. So if it does break through 95.5, the top of that consolidation range was 97.5, 98, which is fine. If it can show strength above this area right here. But let's zoom in. So what this would look like is, say right on the open, it gets above 75 and they're buying 75 and they're playing it for a higher move, and it only gets up to like 75.50 and then comes back down below 75 and gets below 74.70, 74.60. That would be, to me, a signal to play it for a move back down to here. And then I'd want to see what happens. If it took out the bottom of this afternoon consolidation, it could trend down the rest of the day, another $2 or so.
Hope you enjoyed that video. You can actually watch that video if you're subscribed to our Trader 90 before the market even opens. What stocks are in play? What levels in those stocks are important? And how we might go about attacking that stock. That's Steve Spencer, 20-year veteran trader, laying it out there every morning before the market even opens. A really, really powerful tool to start your session off on the right foot. So right now we're offering a trial that you can take advantage of to access this meeting and other meetings throughout the day. We have a meeting at 11 a.m. Eastern where you can sit down with Mike Bellafiore and listen to him talk about what's going on during the morning session, what stocks were in play, what the best trade opportunities were, as well as maybe some things that we're looking at heading into the afternoon session. So I really encourage you to take advantage of that trial.